Oh, life is hard right now in beautiful California. My good friend Roger Wiegand joins me of Trader Tracks. Roger, it's quite a battle being out here, right?
Oh, it's absolutely lovely. I went out of the rain up near Vancouver, Canada, in Blaine, where I live, and it's just such a pleasure to be in the sunshine and be in Palm Springs for the show.
Absolutely. So you're here, Roger, a lot of great speakers at the show. Let's talk about gold and what you expect from the metal from now up until May, June.
Okay, the markets right now on our forecast, we've got gold right now under 1750, which was resistance. We're looking for 1850 next, followed by 1923, which is the old recent high a few months ago. And if things really go well this year in the fourth quarter, I think we can break 2,000 and go to $2,050.
Well, Roger, off camera, we were talking about Chinese buying right now and how it's just exploding. What do you think are the reasons behind that?
Well, China fundamentally right now is not selling any precious metals. They're keeping silver and gold. They're gold buyers fundamentally and technically right now. I don't think they pay that much attention to the price. Their path is just keep buying. And they've got so much in the way of currency and bonds to trade off on U.S. paper that they're exchanging that paper, in my view, for gold and for silver. They have mines in Africa. They've got mines in South America. They're buying stocks in junior mining companies very quietly, in bigger ones as well. And their long path is to probably have a gold-backed currency, which they do not talk about, and most others don't either. But it was interesting in December, this past month, that they bought 105 tons of gold for the 1 month. And also the central bankers are buying gold. They were sellers, net sellers before, but they're back in and they're buyers.
So 105 tons, do we have a source for that information, Roger? I know it's hard to get a lot of info from China.
I got that information from what I consider to be good sources on the internet. We're talking about top news companies that are very responsible. It's not just hearsay or guessing.
Right.
So those things look pretty good. Now, one thing that your viewers and listeners may not know is this. Just a few days ago, somebody in New York, we think it was a big bank, bought 10,000 gold spreads for August on a trade, and the spread price was between $1,900 and $2,300, which means they expect to get paid in July because that's when those accounts expire, probably even earlier in June. Now that's a lot of money. That's $25 million, and it's a trade, okay? Then they came back again last week. We don't know if it's the same one or not. They bought 5,000 more contracts, and interestingly enough, those contracts were between $2,200, $2,300 to $2,600, and those expire probably at the end of the year, or that in fact could be the August contract. I don't know the exact month, but what they've done is they bought $35 million worth of trading cash, and those are the same as options. And for them to get paid on that, they've got to meet some dates that are coming up here pretty quickly. That kind of money does not go out there on trades unless they're fairly confident they're going to get paid.
So when would that impact the price of gold? Would that be an immediate impact or longer term?
Good point. It's already impacted the price, but the price today, is in a minor correction. The minor correction we've got now, I think, is going to be over next week after this show, and I'm looking for a major move in gold up. Where do we go? Probably 1807, then 18 and a half, then 1953. It'll stop there because that's the old high. Then it'll back up and go higher. What people need to remember is the long fundamentals for gold remain intact, the same for silver. And despite these higher prices, people thinking that the end of the gold market is near, it's not. But they should remember that if gold goes to 2250, 2450, a normal correction is going to be 500 points. So it would go back to like 19. And that would scare some people, but that's just trading, and that's the way it is.
Right. So would you say it's a good buying time now?
Absolutely. It's better a buying time right now than it has been for several months.
Okay, some thoughts on silver, Roger.
Silver got beaten up with that big drop from 49.62 back to 26. Fortunately, our forecast and trading, we hit it pretty much on the money. It worked well. Some of my traders made a lot of money on silver. We've been stuck between $30.48 and $34.48. There's a whole nest of little stop-and-go magnet price points, and there's 7 of them. but we're almost on the cusp of a breakout right now. We did touch 34 and change, but we didn't quite make it. It stopped before that 34.48. It backed up. Once we get past $34.48, we're looking for a quick run to 36 and change, then 38 and change, and then we go higher.
Roger, thank you so much for your thoughts today.
Nice to be here, and good to see you again in Palm Springs.
And thank you for watching Kitco News. We'll have more coverage from the California Resource Investment Conference. Stay tuned.